If your favorite currency is not USD JPY, if you see USD JPY there, don't trade it. But for now, since you don't know which days are good for you, try and be trading every day and be identifying the days that makes more money for you. Since you don't know which currency is best for you, try and be doing what? And be identifying the assets or the currency pairs that are good for you. So, and also about time factor. You realize that a currency pair can be good for you, but if you trade it in the morning, it doesn't work. If you trade it in the evening, it works for you. That is also okay. You can do that. So for you to become an expert trader, try and be doing what? Identifying these particular ones as we move along. It's very, very important. No expert trader trades every day. No expert trader trades every currency or all the markets. Sometimes you realize that it's only what? The London market that works for you. So when the Tokyo market comes, when the other markets come, what do? You ignore them, no matter how good people are making money from it. That is how you are able to what? To discipline yourself, right? That is how you are able to discipline yourself. And once you can discipline yourself, you are cool to go. Because the market that you are trading, it works on human psychology. And that human psychology deals with emotions. So if you don't know and you are not able to discipline yourself, you are chasing every trade, you are trading every market. One day you just find out that that is if you are not doing the right thing. If you are doing the right thing and it's going in your favor, well, you'll be making money. But maybe if that day didn't go in your favor, you will lose money. So let's assume that you have $100 and then you want to trade. You tell yourself that no, if I make $20 today, I am leaving the market, no matter how people are making more money, because someone's target is different from your target. And make sure that when you make that $20, you leave the market, you leave trades. Most of us have broken it so many times. And well, we broke it because it acted good in what? In our favor. The fact that you have a target that I want to make $20 today, and that day you broke the rule and you make $100 that day, doesn't mean that we shouldn't tell you the right thing which is supposed to be done. Definitely we will tell you, but you have to decide to do according to it or not. Now, that is the positive side of it. Now, the negative side of it is also what? In case the market didn't go in your favor, I want to lose only $10 a day. So if you say that you want to lose only $10 a day and you are able to stick to that, If you lose $10, you are leaving the market. Then you come back with a different spirit, a high spirit the next day. Other than that, you are going to attach emotions. That is revenge trading. You want to get your money back. And if it didn't go in your favor again, you see that you are losing more. So maybe what you are supposed to lose the next day, you lost it that same day without you knowing what will even happen the next day. You get to the point? All right. So these disciplines are very key for us to remain profitable in the markets. Know the particular assets that work well for you, know the days that works well for you, and know the times that works well for you, so that you'll be able to stick to them, master them, read more about them, learn more about them, and then what happens? You will be able to excel in the market. I hope that is okay. If you can hear me, let me know if you can hear me. Very good. Very good. All right. So if that is the case, if we are all okay with that, let's go simply to some of the things that we are to know, or the things that we have been taught in this particular academy. Now, what we do here is that, or what our educator has taught us is the top-down analysis. The top-down analysis, that is what our educator has taught us. So that is what I'm going to brush through very quickly, so that we all prepare, those of us who have funded their accounts, and even those who want to trade with demo, we can just have a little recap on them, and then we can go and make money. All right. So what is the top-down analysis? The top-down analysis talks about analyzing the market from the higher time frame down to the lower time frame. Top-down analysis. Top-down analysis. That is what we do over here, or that is what our educator has taken us through. All right, so when you come to the market like this, the first thing to do is that you identify whether the market is in an uptrend or a downtrend, or the market is consolidating. Consolidating, that is an indecisive market. That is, the buyers are struggling with what? The sellers. So when they buy small, the sellers take over. When they sell small, the buyers take over. But now, if you don't have a very good strategy, if you don't have a perfect strategy that you will be able to use in the consolidating market, what you do is that always stick to what? A trending market, whether a downtrend or an uptrend. All right. So if you are an expert trader and you come to this market, with just your naked eyes, you will be able to see that this market is trending downwards. This market is trending downwards. Now, if I should go back a little bit, if I should go back and show you something like this thing should be stable. Oh man. I don't know why it's not been stable. I want to show you an uptrend, a market that is trending upwards. If I scroll back, then it's coming to the original place. I don't know why. But if you can see this, you'll be able to know that we are in what? The market is trending downwards. Because look at where the market is now. If you can see my cursor, where the market is now, and then it is coming down, goes up small, and then it's coming down. Now, if you are not able to see whether the market is what? It's in a downtrend or an uptrend, what you do is that you make use of what? The 50 moving average to see whether the market is going down or it's coming up. So now, how do you set the 50 moving average? My interface will be different from what you'll be using on the phone. But then we have the videos that shows how to set the moving average. So what you do is that you come to what? Insert. If you are using the laptop, then you see indicators. So indicators, the moving average is in what? It's in the trending, it's a trend line. So therefore, it's under the trend category. So when you come here, you see the moving average. What you do is that you set the period to 50, you give it any color that you like. And this place, the method, you make sure that you choose exponential. And then you click on OK. We can see it. I believe very well that I told you that the market is in a downtrend. Now look at the 50 moving average. It's moving from the top to the down. Can somebody hear me? Can everybody hear me? Very good. So if you can't use your eyes, all right. So if you can't use your eyes to see whether the market is in a trend, is in a downtrend or an uptrend, all that you do is that you set the 50 moving average for you to see. Now, the 50 moving average, if you see it climbing to the top, it tells you that the market is what? It's in an uptrend. If it's coming down, it tells you that the market is what? It's in a downtrend. So just as we can see, the market is in a downtrend. Now, if the market is in the downtrend, every trader looks for what? Sells. You sell in a downtrend and then you buy in what? In an uptrend. That is what we all must know. All right. So now let me delete my what? Let me delete my moving average. I've deleted it. All right. So now let's talk about what? The top-down approach. So first thing is that when you come to the market, now you have seen that the market is what? Is in a downtrend. You make sure that you check the trend on what? On the 1 hour time frame. So the time frames, if I come to my charts over here, I see time frames, I choose 1 hour. It means that I want to see what is happening within an hour, what is happening in the market. So each of these candles you are seeing here takes 1 hour to finish. Each of them is 1 hour, 1 hour, 1 hour, 1 hour, and that is how it's moving. If I go and then I choose maybe, let me say, 15 minutes, it means that each of the candles here is 15 minutes, 15 minutes, 15 minutes. I hope that is okay. All right. So when you choose the 1 hour time frame, you choose the 1 hour time frame to see what is happening in the market. You can also confirm with the 4 hour time frame. But for you not to complicate things for yourself, just do what? Just start with the 1 hour time frame to see what is happening in the market at that particular time. So we realize that with the help of our physical eyes, with the help of the 50 moving average, we were able to know that the market is what? Is in a downtrend. So all that we are interested in is what? Is to be selling in the market. If you have a position to buy, well, that's okay. But then the rule is you sell when the market is trending downwards. All right. So this is what? This is our what? Our 1 hour time frame. Now, what do you do from here? The next thing that you do is what? You draw your trend lines. You draw your trend lines. So now how do you draw your trend lines? I showed you a video early on which explains how to draw trend line. But since we are looking for what? We are looking for sales. I am going to take you through how to draw the trend line. Now, by drawing the trend line, you are able to identify your resistance and your support. Now, what is the resistance? Resistance is when the market is going up and then something stops it at the top and then it pushes down. Now, the support is when it is going down and something stops it at the down and then it has to go up again. Very, very simple. Very, very simple. So it means that from here, just as you can see, this market was coming down, was coming down, was coming down. Ideally, something stopped it over here and then the buyers take over. It was going and something stopped it over there and then it's coming down. It's coming down, something stopped it over there and then is what? Is going up again. That is just how you identify your support and then your resistance. But how do we draw it? Now we identify the major swings. The major swings. You don't draw your support and resistance on each of the candles. No, you will not be able to have a clear picture of whatever you want to do. So we call something the major swings. That is that particular area that the market has resisted or the market has what? The support happened. All right. So if we look at this, we are seeing that this is the highest point. Since we are looking for sales, we are interested in what? We are more interested in the resistance. So what do? We draw our trend line across all the major what? Swing points. So this is one over here, which is what? The highest, followed by this one. We have one here and we have another one here. All right. So what we are going to do is that we are going to pick our trend line and then we start drawing our what? Our resistance. Very, very, very simple as ABC. Is it difficult? Or who doesn't understand? Let me hear from you. I can't hear anybody.
Let's go over again.
I should go over again. No problem.
Yes.
No problem. So I've deleted the trend line. All right. So what I'm trying to say is that you are able to know that the market is what? Is moving in what? In a downtrend. Therefore, you are looking for sales, just as we all know that when the market is trending upwards, we look for buy positions. And when the market is trending downwards, we look for sell positions. All right. So now, when you are looking for sell positions, you are more interested in the resistance because it needs to go and hit a particular roof and then comes down. So we are going to draw our what? Our resistance. The same way, if you are looking for your buys, you concentrate more on the support because it needs to hit a particular support for it to go up. I hope it is clear up to that place. All right. So now if we are looking for what? Our resistance is where the market has reached at the top and then something has to what? Push it down. Support is where it has reached at the down and something has to what? Pull it up. All right. So now we have these candlesticks over here. Now we are going to what? We are going to take or draw the resistance line from the highest point that we can see here. And the highest point that we can see here is here, as you can see my mouse pointing to. And then you draw it on all the what? You draw it on the major what? On the major swings. The major swings are the places that it has resisted. So if you look at this, you see that it has resisted over here. This is the highest compared to this one. So if we were able to have a higher one before this one, we would draw it on that one. But we can see that this one, when it came down, it was coming down, it went up a little, came down, went up a little, came down, and went up. So this is the second highest one. So we are going to draw it on it. It came down again, went up a little, came down, and went up a little. And then this is the highest one again, following this one. So we are going to draw the trend lines on these ones so that we are able to get our what? Our resistance. So we go here and then we pick our trend line. We put it on the top, that is the apex. We put it here. Right. All right, welcome back. It was the network. All right, can everybody hear me now? All right. So we are able to identify the highest point here. The second highest is here. The third highest is here. And then it goes on. So if you're able to identify the major ones, 3 or 4, you are able to draw your what? Your trend lines on them. So we are able to identify one here, here, and then it follows on like that. So this is where we are going to draw our what? Our trend line. Now, we have something called an area of value. An area of value, I believe very well that our educator knows the particular place to put it or where to touch it for you guys. So I wouldn't like to jump before he touches that place because he knows how he's taking the lessons. But if I can be brief a little, area of value, it's simply a gap between the wicks and then the main candles. So if we want to identify an area of value, you could see that the highest point at the second resistance, it's this place, but there is still a gap over here. So we can have an area of value also here. So we treat this place as an area of value. That is, if the market should exceed this place. But since he hasn't touched it yet, let me just delete it. But just to give you a clear picture of it. Because someone may ask, why is it that this one didn't touch this place? Because if we should draw it for it to touch this place, we wouldn't get a clear picture of this particular market. So if these candles from this place had not come, we would have just drawn it on it over here. But because we are seeing these candles over here, we just draw them clearly here and then apply the area of value. All right. So now that we have drawn our trend line, what does it mean? Now, the market has a memory. It has a memory that if it is going up, it will hit a certain roof and then do what? Come down again. It will hit a certain roof and then come down again. So it means that the market was coming down over here, and then it has what? It has reached support over here. It's going up, and knows that it will hit the roof again. The roof which you have drawn over here, that is the resistance, and then come back, come down again. It is going up, and then it will hit the roof again, and then come down. As it's coming down, it has reached support. It will go up and hit the roof again, and then come down. So as it came down over here, it will go up again and hit the roof again, and then come down. So that is it. So it means that this market, if it should go up, it will go up and hit your trend line and then come down. That is why it's very important to draw the trend line. So it will go up and hit the trend line and then comes down. So at the point that is going to hit your trend line, that is when you go into the trade because you knew certainly that what it will come down again. So if you are going to trade in this market, you wait for it to hit the trend line, get into the trend line, and then you set your stop loss a little above it, depending on the number of pips that you are risking to lose above it, so that in any case that it goes against the trend line, you don't want to lose more than that number of pips. Very, very simple as that. Is it clear up to this stage? All right. So now you have drawn your trend line on the what? On the 1 hour time frame. So what do you do next? You go to the 30-minute time frame to check whether to confirm, let me say so, to confirm. So now I'm going to the 30-minute time frame. Now, I am on a 30-minute time frame, and what I have drawn on what? On the 1 hour time frame, I can still see the same thing over here. It has given me another confirmation that what I am doing is right. Very simple. You don't waste your time over here. Then you move to what? The 15 minutes. So you move to the 15 minutes where you'll be taking your trades. Now, if you move to the 15 minutes, you are going to see whether the reaction has already taken place or not. Because the lower time frame moves faster than the higher time frame. So each of the candles you are seeing over here is what? It's 15 minutes each. So as you go to the 15 minutes to see, you can see that this market is going up. So keep this particular asset in mind. This particular asset that we are dealing with, that is XRP-USD. XRP-USD. Any of you can trade it and you can be monitoring it. So it means that when this market goes up, it will go and hit the trend line and then come down. Now, the market has no certainty, as in 100% that when it hits the trend line, it will come down. But that is what? The market psychology. That is the strategy that the market is based on. So if you can see this over here, when the market was going up, it's about to hit the trend line, and then it comes down. It was going up, about to hit the trend line, and then it comes down. It was going up and this one hit the trend line and then came down. This one is going up. You are waiting for it to go and hit it, but it didn't even hit it. But then it starts coming down. So that is how it works. That is the psychology behind what? The market. So you knew very well that when this goes up, it will go and hit the trend line and then comes back. Unless, of course, there is what? There is a change of trend. Listen to it very well. Unless, of course, there is a change of trend. But if, because sometimes the market can be going downwards and then the trend will change. That is, the buyers have come in with plenty money to come and buy, and then it will even break your trend line. That tells you that the market has changed its direction. So if the market didn't change its direction, it will hit the trend line and then comes down. So when you come over here, all that you are coming to see is that has it already hit the trend line or not? Because sometimes it will hit the trend line based on how it's moving faster than the higher time frames. So you are cool with this. You can wait for it here and take your trades. But then if you still want to have a quick confirmation, you can still check it on what? On the 5 minutes time frame to see it. And you can see that it's still moving upwards towards what? The trend line for you to take your trade. So if you see this here, you set your stop loss above, and then you do what? You enter the market for what? For a quick sell, and then you scalp. Very, very simple as A, B, C. I hope this is clear to everybody. Anybody having a problem with it? Hello, Mr. Stevens, Romsey, Madam Helen, Mr. Eric. Any question on the top-down approach?
Okay, inside the circle, take the trending line.
I can't hear you, sir.
Green line, the instrument, inside the school, we pick the trending line.
You are asking where you pick the trend line.
Yeah.
Yeah, I am using the laptop. So mine may be different from those who are using the phone. So, but if you want to take the trend line, oh, that's not a question you're asking.
That's what I'm asking.
Okay, so I am using the laptop. So, you know, we've been using the phone all this while. I just decided to use the laptop to show you a broader picture of everything. So if you want to pick the trend line and you are using the laptop, it is just at the top over here. You see, when you put your arrow on each of the icons that you are seeing over here, it will tell you what it is. This is draw vertical line, this is draw horizontal line, this is draw trend line. So you pick it and then you click on anywhere and then you just drag it. That's all.
Okay.
When you right click, you can delete it. That is all.
So it's different on the phone.
Come again?
I said, but it is different on the phone.
Yeah, on the phone you have a place, a section that is when you click on your main screen, you see that round circle, the blue one. Then the icon,
Okay,
the icon is there. That is between the settings and the 1 minute. There's an icon there between the settings and 1 minute. The settings icon and 1 minute. You just click on it and then you see all of them over there. All right, so if we all understand the top-down approach, let's add few more things and then we close and go and wait for the market, those who will be trading tonight. Now, we have indicators that also gives us more confirmations. So the indicators that we are using over here, that is the Oxford oscillator, the stochastic oscillator, and then the moving averages. So let me quickly set them so that we can be able to use them. So I'm going to set the moving average first. This is 50. I have color black exponential. The method should be exponential. So I click on OK. You can see it there. That is the black one. I go to indicators, pick it again. Since we are using 3, we change the second one, the period to what? To 10. And then you give it any color. So I prefer to give it color blue. And then I click on OK, just as we can see. And then the last one, I choose red color. I will choose red color, but the period should be 3. And then I click on OK. All right, so I think let me change the color for the red. Let me give it, so because of the candles, let me give it yellow. That is the 3. Let me give it yellow. And then for the blue, let me give it a green color so that you'll be able to see it clearly. All right. So now we have a strategy that we use over here. That is, if you see the moving average 3 crossing the 10, which is the green, and they both cross the black one, which is the 50, and they're all moving towards the same direction, it gives you an idea that the market will be going towards that direction for a long time. Example is what we can see over here. I don't know why my screen is not being stable. I don't know.
Can you repeat it again?
Come again. I should repeat. All right. So what I'm trying to say is that when you have the moving averages, the 3, the 10, and then the 50, what you do is that anytime the 3 crosses the 10, and they both cross the 50, and they both cross the 50, and they all move towards the same direction, it means that the market will be going towards that direction for a long time. Is it clear?
Okay, understood.
So I want to show you. I'm not understanding why, but if you can see, let me push it a little. Look at this. If I scroll back, the market will come back. If I scroll, it will come back. I don't know why. Let me see if any of the time frames will do. Let me see the 15-minute time frame. Oh, it's also happening like that. But ideally, that is the concept. When you see the tray, know the color that you have given to the tray, know the color that you have given to what? The 10, and then know the color that you have given to the 50. The settings are very important. And when you see the three crossing, anytime the tree is crossing the 10, it shows you that the market will be going towards that direction. Look at it. The yellow crossing the green. Have you seen that the market was going up? Now, the yellow crossing the green downwards. Have you seen that the market has started coming down? So it also gives you an idea. And if both cross the 50 and they all moving towards the same direction, it gives you an idea that the market will be trending towards that direction for quite a long time before it will reverse. All right. Okay. So that is about the moving average. Let's deal with the last two, which is the stochastic and then the Oxford oscillator. So now I'm going to pick the stochastic. The stochastic. The stochastic, always make sure that your levels are what? 10 and 90. 10 and 90. So this is the stochastic. Now, what is the function of the stochastic? The stochastic is to show you or tell you when the market is overbought and when it's oversold. So when you see the stochastic at the top, it means that it is overbought. Therefore, it will come down. When you see it at the down, it means that it is what? It is oversold. So it will go up. So just as we can see here, just as we can see at the top over here, the same time the stochastic is at the top, it moves down to this place. The stochastic also moves towards the down. So if you use the top-down approach and you see the time that the stochastic is what has hit your trend line coming down, we check your market, the candles have hit your trend line, you check whether the stochastic is what is also at the what at the overbought stage for it to come down to give you another confirmation. Very, very simple. Now, and then the last one is the Oxford oscillator. The Oxford oscillator, you don't do any settings. The Oxford oscillator just tells you the momentum of the market at that particular time. The momentum of the market at that particular time. So you can see the reds over here, the red bars here, and then this is where the market has started rejecting. This is where the market has started rejecting, and then the buyers have started taking over. So it means that all these reds, they are telling you that the market is in the hands of what? The hands of the sellers. And now the bulls have started taking over. That is what you are seeing over here. It also gives you an idea where the market is what is going to. All right. Any question on the indicators?
So please indicate is applicable to binary option as well.
Come again. Come again with your question.
The indicators and settings. Indicators and its settings. Is it applicable to binary option?
Yes, please. Yes, please. Yes, please. All right. All right. All right. Any question? Any other question? Any other question? Is somebody speaking?
I said it is clear.
All right. All right. So it means that everybody can now go into the market and then kill the market. So let me add one more tips to it for you. Let me add one more tips to it for you. For another bigger confirmation. We call it the currency strength meter. The currency strength meter shows or tells you how strong a particular currency is at that particular time. All right. So all that you have to do is what? You can go to Google and just type currency strength meter. The first one, that is the livechat.uk.co.uk. You click on it. Now, this is the currency strength meter. What does it tell you? It tells you the strength. All right, welcome back. This network is disturbing us, but we are almost done. All right, can everybody hear me?
We are not hearing.
Wow.
Okay.
Is it okay now?
Yep.
All right, all right. Let's hurry up and then finish because the network is trying to disturb us. So now this is the currency strength meter. When you are trading, always trade in favor of the currency that has the highest bar. The currency that has the highest bar. So if you look at this, if we are trading, let me say USD JPY, always trade in favor of what? If the JPY has 6 bars and the USD has what? Has 3 bars, it means that there are more sellers on what? On the JPY than what? Than the USD. So this kind of market, if you go in for a sell, you don't go in for a buy. Are you getting it? Now, how do you know whether this one is for buy or this one is for sell? This is it. If you come to the market, there are 2 assets that you are trading. So let me use AUDCAD as an example. This is AUDCAD. The buyers are always what? In favor of the first currency. And the sellers are always in favor of the second currency. Let me repeat it. The buyers are always in favor of the first currency. You can write this down. Buyers are always in favor of the first currency, and sellers are always in favor of the second currency. This one is not any analysis. You just keep it off head. Buyers for first currency, sellers for second currency. So this is AUD CAD. So when you see the market going up, know that it is what? The AUD that is going up. When you see it coming down, it means that it's the CAD that is coming down. All right. So based on what we learn, let's go to the currency strength meter. AUD CAD. Is that not it? Now, this is the AUD, the Australian dollar, and this is the CAD, the Canadian dollar. So if you are going to trade, I always say that trade in favor of what? Of the second currency. So since we know that the CAD is stronger than the AUD, when we come to our trading platform, we are going to trade in favor of what? Of the AUD. Is that not the one? Which one is bigger? Which one was bigger?
The CAD.
The CAD. All right. The CAD is bigger than the AUD. All right. So we are going to trade in favor of what? Of the CAD. So when we come to our trading platform, we are going to trade in favor of the CAD. So we are only going to look for what? To sell, because I told you that the second one is for sell, the first one is for buy. Very, very simple as that. This is another tips for you guys. It's very clear, right? Let's do another example. Let's come again.
Okay, that's good. It's good. You are giving us some things.
All right. So let's pick another one. Let's pick Euro USD. This is Euro USD. This is Euro USD, as we can see over here. So now let's go to our currency strength meter. This is Euro, and then this is the USD. The Euro and the USD, which one has more bars? The Euro. Very good. Euro has how many bars? 1, 2, 3, 4. Then the USD has 1, 2, 3. It means that the Euro is stronger than what? Than the USD. So let's go to our trading platform. The Euro is always what? Always the first one, which is the buy, just as I told you. And the second one is what? Is the sell. So you can see that the Euro is what? Is moving upwards. Stronger than what? Than the USD. Very, very, very simple. Very, very simple. As you can see on the screen right now. So after your top-down analysis, after confirming with the stochastic, the next thing is what? You should be looking at what? On the currency strength meter before you take the trade. Now, another thing too is that the currency strength meter is updated every 5 minutes. So every 5 minutes, before you do your last confirmation, just refresh, and then the last update. Other than that, this one can be won in the last 10 minutes, and you will still be trying to take your trade based on it. Meanwhile, it has increased and you don't know. So every 5 minutes, or before you do your last confirmation on it, refresh it so that you'll be updated with the current state of what? Of that currency. I hope that is also clear. I hope it's clear.
Yes.
All right. All right. All right. And then another thing too is that, we are revealing everything here. Another thing too is that it's quite dangerous to trade currencies that have maybe +1 and -1 bars, because as at the time that you want to take the trade, the one that is having less bars might increase to what? Might increase either by 1 or by 2. So for you to have a clearer confirmation, you can have maybe at least 2 bars greater than what? Than the other one. So if you can see this one, if I am going to trade GBP JPY, and GBP is having 1 bar, and JPY is having 1, 2, 3, 4, 5, 6 bars, it gives me a clear confirmation that no, the market is what? Is in the hands of what? Of the sellers, because the GBP has more bars than this one. Are you getting it? But now let's look at what? Let's look at card. Let's look at USD card. USD card, this is 3, and then this is what? This is 2. Even though I'm going to trade in favor of this one, it's quite dangerous because this one can increase to 1 at any time. At any time. So you should be checking that one also. The one that has more bars than the other one, then maybe at least 2 or 3, then it also gives you a clearer confirmation for your trade. It's good to take a perfect trade than to be gambling in the market. So if you have to wait for a trade to use 1 hour, 2 hours, 3 hours to set, you can wait for it before you take the trade, and then you know that you are confident of what you are doing. The last time Mr. Eric was saying that he was monitoring a particular trade since dawn, and he was able to take the trade in the morning, and then eventually what? He won the trade. So patience pays very, very much in this market. So all the tips, all the things that we learned this evening, please make good use of it, and then make sure you don't deviate from them. One thing too is that in trading, in forex trading, that is why the books are there. Please, those of you who have the books, you should be reading through. You'll come across a lot of things that your facilitator may not speak about, and also learn widely. If you have anything new, you can also share with us on the page so that we all learn together as a community members. So the books are very important. You can take your time, watch the videos over and over again, and don't forget to draw our attention if you are having any challenge. All right, I hope we have gotten value from this evening's session. Any question?
Please, when you are trading against commodities,
when you are trading what?
You still check the against commodities, maybe gold and does the strength meter, I don't know, does that one have a way of checking?
I haven't seen gold on currency strength. Yeah, it's a good question. I haven't seen gold on currency strength meter before. I haven't seen gold on it before. But you know,
I think somebody said,
come again.
I think somebody said there is, so let us listen. I think I have 2 of them.
You have gold
I'll be sharing. Yes.
on which website? Which website?
It's an app.
It's an app.
Yes.
Oh, okay. So you can share it with us on the page.
I'll be sharing it.
Exactly. Exactly. You see what I'm saying? So if we all learn widely, there are a lot of things that you come across which the educator is not even aware of. He will even come and learn from you at the end of the day. That is okay. So, Mr. Eric, thank you very much. You can share it on the page for us so that we all do what? We all get to know about it. All right. Thank you. Any more questions? Any more question, please? Are we all okay? It seems I can't hear anybody.
Yeah. Okay. That's good. This is wonderful.
Yeah. All right. So
that they are for us so that we can begin to prepare ourselves for planning this week.
come again, sir. Oh, okay. He will share it. He will share it with us.
Help us share.
Yes, he will do that. He will do that.
But still, I am in this.
So that we can all benefit from it. All right. So Mr. Eric has shared the app. I can see it on the page. And then if there is no other question, then thank you all for being part of the session, and then enjoy the rest of your nights. All right.